Good afternoon. I would like to welcome you to Šiaulių bankas meeting with investors. I'm Emilia, an account manager at Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. The agenda couldn't be simpler. We start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage everyone to ask questions during or after the presentation in the question box of your screen. With that said, I'm pleased to introduce today's presenters, the Chief Executive Officer, Vytautas Sinius, and the Chief Financial Officer, Donatas Savickas. Gentlemen, please, the floor is yours. Good luck.
Dear ladies and gentlemen, good day. It's a pleasure to welcome you to Šiaulių bankas first quarter investor conference webinar. I hope you will have a good time getting information from us, and please put your questions to the chat. We'll be happy to answer them after our presentation. So with that, I would like to start from the summary of first quarter results. So the opening of 2021, I would call rather successful, taking into account the context of life well, still living in a pandemic situation, and also comparing with some peers. So overall, I would say that the first quarter was quite successful for Šiaulių bankas. Talking in figures, we've earned 12.4 million net profit in first quarter as a group, and that is 48% up compared to the same period of 2020. And it was, yes, also slightly above our expectations as we internally projected. Inside this figure, of course, there are different trends. So we have rather flat income development compared to the same 2020 first quarter. And again, situation was influenced by pandemic, since the first quarter was still tough with the second wave of COVID-19, not only in Lithuania but worldwide. So income was flat, and I would again treat that as a rather good achievement. With the costs, we were slightly better, and the provisions that also had impacted results development. So the provisions mainly stand rather flat, and that made better profits compared to the 2020 first quarter. Talking about the strategy plans, as last time we presented, renewed our strategy for 3 years. So we now actively working on it and implementing all those initiatives that we put it into the plan. So I'm happy about the development in different of projects, and probably it's the first time in history we have a rather structured way of executing our strategy. So in different directions, client related, governance related, digitalization, and number of other areas that has been mentioned in our previous presentations. Another worth mentioning aspect is development of NPE portfolio. Just remembering, we have a slight increase of NPE figures in the end of last year, in the fourth quarter, after revaluation of some positions in early NPE. Nevertheless, we were able to work hard with NPE portfolio and to reduce that by 15% in the first quarter, without visible impact to provisions. As you can see, the provisions, as I mentioned, is mainly flat. Investments to IT systems and remote channels development allowed us to serve more clients remotely. So I'm happy about this trend, and our continuous improvements in front-end solutions, I believe, will result in better customer experience and further growth of clients using Šiaulių bankas remote channels. Few words about the KPIs. So as you see in the table, stronger than target for 2021 return on equity, 14.2%. Cost income below our targets, and if we exclude the impact of Šiaulių Bank SB draudimas impact, that would be close to 42%. Capital adequacy ratio strongly above our appetite level of 15.5%, and is close to 20%, and cost of risk at 0. So in the next slides, I would give some information about the macro development, not going too deep to that, but just some flavor to those who are less familiar with the situation in Lithuania, and some views of the COVID situation in Lithuania and in the bank. So I would say Lithuania remains rather resilient to the COVID impact and to pandemic, negative sides to the economy. I would say Lithuania pretty well coping with that, and that gives us a strong background further to grow for the bank and for the companies. Expectations for 2021, again, rather strong and improving. Different type of macroeconomists currently updating the figures for 2021 for Lithuania, and initially that was rather moderate, but currently we see the figures of GDP updated upwards and reaches even 4% or more. So let's see, the first quarter started strongly with 1% growth of GDP. So let's see, but in the comparison of other countries, Lithuania's development remains pretty strong in last year and this year too. So naturally, we are, as the whole of the world, impacted by the COVID, and currently country is moving out of the lockdown restrictions step by step. There is no drastic changes, but as you can see in a graph, there was some bounce back after the second wave in the end of 2020 and beginning of this year. However, I would say that very intensive vaccination against COVID-19 would allow us to start reducing the figures of new cases in Lithuania, and hopefully we all will come back to a bit more normal life than we used to have in the last year or so. From our branch activities, I would say there was no drastic moves during the old times. We had some more closures in 2020. In 2021, we step by step coming back to our full open branch mode, and currently we have 57 branches, so it's almost all branches are already opened. Thus, we are, demonstrating that we are close to the clients even in the tough times, and trying to not limit anyhow services to the clients also physically. In the next slide, I will like to describe in more details loan portfolio dynamics. So you can can see that after the rather exceptional 2020, which was with some decline of a portfolio of Šiaulių bankas, especially related to the corporate sector. In 2021, I believe we come back to stronger growth, and hopefully, if the year develops smoothly, we'll come back to much bigger figures of a growth, and especially I would mention that for the corporate lending. So all in all, we had the 3% growth in the first quarter compared with the beginning of a year. If we would compare with the beginning year on year with the first quarter of 2020, the growth would be 9%. So the recovery also comes with some increase in competition, and that reflects in our overall margin development. So you can see the yield of portfolio slightly decreased by 30 basis points. So one of the aspects of this reduction is related with tougher competition. I'm also happy to mention about the pipeline of clients and new loan origination in the last few quarters. So you can see also that the fourth quarter was bouncing back after some sluggish quarters in 2020. So last quarter and the fourth quarter of 2020 is they are both above 250 million euros, and that creates a good pipeline for our portfolio to grow in the forthcoming quarters too. With that, also worth mentioning that in 2020 the whole market decreased by 4%, and Šiaulių bankas managed to have better development than the market, and therefore our market share increased by 80 basis points to 8.5%. Another aspect worth mentioning is our continuous diversification of portfolio. So increasing volumes of private lending and well-diversified corporate financing allows us to grow with the size of new loans, and also to finance more in different type of sectors. So the more diversification we have in our portfolio, the more room for new clients, for new sectors to grow we have. So overall, I would say the development of Šiaulių bankas loan portfolio is pretty healthy. And now I can drill deep a bit to the particular lending sectors. So let's start with the corporate financing. So as I mentioned, the demand is back. The clients are much more active in additional financing. So I would say that could be related with a bit more clear situation with the pandemic, with the vaccination, and expectations to start to be more proactive into investment of different projects or increasing volumes of business. Therefore, the need of working capital overdrafts is also coming back to the need, and also the government measures and tools to support businesses is much lower than in 2020. Therefore, banking financing is again more in demand. And also another aspect also already slightly touched is growing competition. So banks are continuously more proactive now in working with clients, and that also reflects in the margins of new loans. So you can see, 40% decline in interest rates for corporate lending. But with that, we are attracting stronger clients as well. So it's a kind of another aspect of diversification of working with stronger clients that again more resilient to different type of business challenges. So hopefully with this reduction of interest rate, we would improve our average client profile from the risk perspective. Again, even more severe trend of decrease of loan portfolio was in 2020 in the sector, so it declined by 15%, while the bank again performed slightly better than the market, and our market share increased close to 1 percentage point up to 13.6%. And a few comments about deferral of repayments related with the COVID. So we, as the other banks, also joined moratoria and also did deferrals by ourselves outside the moratoria. So just talking about the first quarter, we have 24 million euros expired of those deferred loans, and only 1% of them have applied for additional restructuring. So the requirements for the additional restructuring in average is rather low, and we see that trend quarter by quarter. So this first quarter was exceptionally good on this return of the clients to normal payment terms. And just for information, we also, as other banks, joined the prolonged moratorium, which has ended at the end of March, and most likely it will not be renewed if situation develops further as it is now goes. So most likely the banks will continue to work individually with the clients, solving together problems of a particular client that still are impacted by the COVID-19 pandemic. If we will move to the mortgages and consumer financing, so again to private lending related businesses, however, trends are rather different, and that continues to positively surprise about the mortgage development. We have a strong quarter. Same trends were in 2020, but again we have a record quarter with 41.2 million of new loans signed with the clients, and development of real estate markets, residential real estate market remains strong, not only in the larger cities, but that also influence the market activity and also the price development and liquidity in the other smaller towns as well. And compare with the market share growth, where again reached rather impressive development in a short period of time. So we up to 3.4%, and the last year was for us successful both in organic growth, but also just reminding the acquisition in the second quarter of 2020 with acquisition mortgage portfolio from Danske Bank. With the consumer financing situation is quite different. There's no that traction of growth in the market, and that was also in 2020. So you see a rather flat portfolio during that time, and the first quarter we have a reduction by 3%. And again, the consumer financing market hasn't bounced back after the this pandemic impacted consumer financing market development. But nevertheless, I would see rather bright development looking forwards, and knowing that now shops are opening and more clients coming back to the physical shops, we definitely will see more activity happening in a consumer financing business, since our company that dealing in the sector, the rather active player in financing clients purchased goods. And worth mentioning that during the pandemic period, as Balizingas has successfully shifted to online purchase financing, and we expect that it will continue for those clients that want to shop online, and the part of the clients that would come back to the physical shops, the additional growth should come out of there. Additional growth potential I would see from the bank's branches, since the client access still was rather limited to the branches due to the lockdown. After opening, we would see that the clients would come back to the bank's branches, and more consumer loans would be originated in a physical branch network too. Yeah, so nevertheless, as in all other sectors, we had market decreased of consumer financing higher than Šiaulių bankas group. Therefore, market share in 2020 of our group has increased by 1.5 percentage points, close to 12%. So overall, I would say again, we are knowing the sector is rather difficult as of now, but our performance are slightly better than the market, and hopefully after it comes back, our figures in consumer financing will return to the growth mode. Okay, let's move to the daily banking, another group of business services that I would say the good thing is rather diversified, and we are having different type of retail services, and as you can see, there is some of them are growing, some of them declining, and definitely a situation with pandemia impacted number of those services to the clients. So we have a slight increase in income by 2% in the first quarter. If we would compare year on year, we have flat situation, zero growth. Knowing that the 2020 first quarter was almost how impacted by COVID, so we could say that still we're doing rather good on net fee and commission income, knowing that part of our income is related with physical client activity, like cash operation, like FX. So we've been able to compensate partly those lower activities of the clients. And also worth mentioning that securities brokerage was extremely improved compared to the last year first quarter, and increased by 69%. But payment, cash operations, account administration, there is a decline, and some of that I would expect again could be compensated in the future quarters when the life becomes more to normal and more traveling, more activity would happen physically in the countries. Yeah, we have also quite active usage of our service plans. So this is a service package with a fixed fee and number of services received by private and corporate clients. So we have pretty good 10% growth year on year, and the number of clients reached 164,000 that are using this type of service. So it's a good fixed income for Šiaulių bankas, and for the clients it's very beneficial and useful to have different type of services for the fixed price. Good. So with that, I would like to pass the microphone to Donatas Savickas to continue with the presentation.
Thank you, Vytautas. Good afternoon, dear investors of Šiaulių bankas and other stakeholders. I will comment the remaining several slides and start with funding. I won't read the bullet points that is on the left side of this slide. I'd rather comment this graph that is presented here on the right. As you can see, deposit portfolio, which is the main source of funding for Šiaulių bankas and contains more than 2/3 of all funding, rise steadily in all quarters, but it's not how to say, it's very similar picture in other financial institutions as well, because right now is it's not deficit, it's oversupply for funding is visible everywhere, and therefore for banks it's sometimes it's a bad impact on results when funding rises too quickly, because negative interest rate applied by ECB makes banks to look what alternatives for investment they have in order not to have losses. So the growth of 7% during the first quarter is how to say good, but it probably a little bit less than our peers have, and we are not complaining about that. What we are happy about that the cost of funding is decreasing, and we see room for further development in the same direction. So the main source for such trend is because of changes that we introduced to our term deposits. So we still paid quite moderate interest rate for term deposits, despite the fact that other banks almost for all term deposits they offer nothing or close to nothing. We decrease a little bit our interest rate, but we're offering for our customers, and that gives us how to say steady decrease of funding, and that compensate decline in loan yield that Vytautas commented earlier. So probably we can move on the next slide, talking about capital and risk management. We already mentioned this fact several consecutive quarters, saying that we are well above minimum requirements of capital adequacy ratio. Of course, the threshold required by the regulator is decreased temporarily for the reason of pandemia, but our risk appetite line, which stood at 15.5%, is how to say we have significant reserve above it, and our current capital adequacy ratio of 19.6% and if we include the interim profit of first quarter, so it stays above 20%, which provides, how to say, room for maneuver, either to offer dividends when it will be allowed, or to grow significantly and support the growth without external investment from shareholders. Liquidity position also stays at very healthy and safe level, close to 300%. It how to say, it probably hits this how to say, level where is becoming, it's very safe, but it's becoming not efficient. Therefore, so the fact what I mentioned earlier about funding, so makes us to think about moderate growth in funding further. What is interesting, and probably you are waiting news from us regarding comprehensive assessment exercise that consists of asset quality review and the stress test, what was performed and is still performed by ECB. It started in 2020, and we anticipated that we will be in position to announce final results by the end of April or May. But due to the circumstances not depending on us, the final how to say, official closure of this exercise will be announced later, and we expect this happen in June of this year. But we hope that all comments that were made and what we needed to change were already reflecting on our annual financial statements of 2020. But in order to finish this officially, we need to wait until this final call from ECB. And I mentioned already dividends, and the recommendation from ECB is valid until the end of September this year. And we hope that it will be not extended. And then when next year annual shareholders meeting will take place, we'll be in position to decide what to do with the surplus of capital, what we having today due to the 2 years of no dividends or very small dividends that were offered this year. Yeah, probably we can move on. Talking about loan portfolio quality, and surprisingly, probably, and when pandemic started last year, initial reaction was very cautious, and due to the model of requirement of IFRS 9, so we made provisions in advance as required based on the forecast. However, the metrics that show the actual development of portfolio does not show any signs for worries right now. As you can see from the graph, loan past due more than 30 days, that indicator of early problems, it goes down steadily for several consecutive quarters. When we talk about cost of risk provisioning, so we already mentioned, and you see that it's stood at 0 level for the first quarter, and that probably the fact that provisions that we made during the 2020 reflects the actual how to say, requirement, what is necessary for our loan portfolio. And this fact is proved additionally by the development of NPE loans. As you can see, in first quarter of previous year, we observed increase in NPE loans, and it was mostly driven by the recommendation derived from comprehensive assessment exercise. During first quarter, we managed to decrease this level of NPEs, but not because we withdraw these newly appeared loans from NPE, but we managed to solve some problems that we had in the past, either to selling these loans or making customers back to the performing quality. And the fact that the sale of these loans did not require additional provisions makes us believe strongly that the level that we provisioned these NPEs in the past is reflect the adequate value of these loans, and it is proven by the fact of actual sale. Of course, the situation is good so far, but everybody listen every day or every second day about the possible cliff effect, and of course we hear signals from the most affected sectors, companies in this mostly affected sector, that their, how to say, capability to stay in business is decreasing day by day, and therefore so we happy about the current trend, but also we are monitoring very closely, and we are ready to make additional necessary steps if situation will become not so good as it worsen in the future. What we made additionally, I could comment this third bullet point on this slide, that in order to make our risk grading more granular, and we introduced more financial risk group that makes us to identify the strength of our customers more precisely, and to make this process of need for provisioning more exact. Yeah, probably we can move on. Next slide. And this is the final slide. It's we added in this table on the bottom 2 additional columns that states metrics of share data for the end of first quarter, and also the latest figures that put into account the positive development of market share price movement in the last few days. And this our target price that our analysts that making reviews of Šiaulių bankas made in the beginning of this year, when they mentioned about the target price in the range of 65 plus more or less 65 cents, we are reaching this level. And as we contacted these analysts and asked what about their forecast, most of them said that they reviewing their forecast, and probably they will release some updates later on in the coming weeks or so. Yeah, probably that's it from my side. I wanted to mention, and now we are ready to questions from you. Thank you.
Thank you very much for the presentation. As you have mentioned, now we will proceed with the questions. Before that, I would like to kindly remind every one of you that you can send in your questions in the question box of your screen. So please do not hesitate and share your questions with us. So we received several questions already. So the first one is as follows. Why should investors be interested in investing into Šiaulių bankas? Thank you.
Okay, thank you. Vito is here, so I can take this question. Yeah, probably a number of reasons. I would say that some are related with Šiaulių bankas, some maybe broader. Just coming back for the thoughts that I mentioned during the presentation about rather strong macro fundamentals of Lithuania, and both track record of the last years and projections for the future. I would say if all that comes true, that the development in 2021 would be successful, most likely that would also benefit for Šiaulių bankas development. Another aspect I would mention that Šiaulių bankas already have a strong track record of being the bank in Lithuania almost for 30 years and built a strong franchise with the current clients and acquiring the new ones. So we know how to deal business in this country. We know our core competences and how to compete in the market. Again, momentum of rebalancing of loan growth and the commission income, I believe, is a good momentum for bankas to generate a new revenue in the future. Maybe some thoughts about the key indicators. So relatively, we're still undervalued compared to some peers and to the broader markets. If we would look to the PE or price to book ratios, and rather continuously strong performance on return on equity. So that would be the argument. Again, the supervision by ECB and the continuous investments of Šiaulių bankas strengthening the governance and the risk management of the bank. Of course, it's a burden and cost, but in the longer run, I believe they would pay off and will strengthen our business model and generation of income. And the last but not least, the turnover of a stocks. I would say we managed to reach the rather decent levels of liquidity. Historically, it was a problem, but we are happy that Šiaulių bankas was and is one of the most active traded stocks in the country, and the capital market development makes us happy in general, and the liquidity, we hope, will not disappear out of this region and will continue to grow, and that allows the new investors to join the Baltic market, and potentially Šiaulių bankas was one of the best performing stocks in it. So probably that would be, first assumptions that I could share.
Thank you very much on the very comprehensive answer. We have received another question, which is as follows. Lithuanian lawmakers approved higher tax on bank profit in December 2019. How has this influenced Šiaulių bankas? What do you think of the new tax? Thank you.
Yeah, this is correct, and we're paying higher income tax, profit tax already for 2020. So it will continue also this year too, and this is 5 percentage points above the standard profit tax in Lithuania. Yeah, probably it doesn't worth to question whether it's fair to have higher profit tax compared to the other sectors. That's a question for politicians. On the other hand, we are happy that we are contributing more to the country. But the question of fairness and the equality, it still exists. So probably this question will be resolved and will be checked whether it's legally correct. but so far we are paying higher interest, higher profit tax. Of course, so this solution is better than the other alternatives that has been discussed in the past about asset tax. So in the situation like this, when we have a COVID crisis, and that also have impact on the profit level for the banks in 2020, it's better than to have just asset tax. So yeah, let's see how it will be resolved, because this was a limited period for 3 years of this profit tax increase. But so far, yeah, from positive side, we see that we're contributing more to Lithuanian budget, and that stands, if I recall correctly, more than 15 million euros, not only the profit tax, but the other taxes like VAT that Šiaulių bankas pays. So we treat ourselves as an important taxpayer in the country.
Thank you very much for your answer. The third question that we received is as follows. Šiaulių bankas shares were the most traded shares on Baltic main exchanges in 2019-2020. What do you believe is the reason for this? And are you surprised by the result? Thank you.
I will take this question. So yeah, we are happy that we are the mostly traded shares in the Baltic stock exchange, and I would probably mention several reasons that could be the why it is so. One of this reason is that we perform consistent work with investors for several years already, making roadshows, making one-to-one, participating in conferences, and spreading the word about the Šiaulių bankas and showing the results. And corporate investors or funds, they are, how to say, not acting very rapidly. If we draw their attentions, they probably look whether our promises are implemented, or we just talking. And probably after some test period, when they believe, they invest in Šiaulių bankas, and every investor has a different time horizon, and probably after some time they want to sell the position, and probably new investors are coming. Therefore, this buy and sell meets in the stock exchange, and that creates a volume of trades. Another reason I probably could mention that for these many years, we acted as an indicator, or I would call icebreaker for retail investors. So, and Lithuanians are more cautious or conservative compared to, for example, Estonian retail investors that managed to raise volumes in Estonia in the traded companies. And we noticed that more and more retail investors are coming to Šiaulių bankas. I'm not saying that only Estonians, but probably they were first, but then we see that local retail investors are joining them as well. And as I said already, good track record of sustainable result that Šiaulių bankas shows in good times and in not so good times make probably our share to be treated like it's possible to, how to say, project what could happen. It's not one day business, and probably this is the result that will not be over soon, or in how to say, it's not one week or one year phenomenon that disappears afterwards. I believe that it will be long trend for such a track. Thanks.
Thank you very much for the answer. I would like to remind everyone that you are welcome to send in your questions in the question box of your screen. So let's continue with the questions. The next one is as follows. Could you please elaborate on the decision to use the early repayment option on the TLTRO free loan? Thank you.
First of all, I would say that this decision is not, how to say, taken as a final. We have such intention at the moment, but the final decision should be made in September. So we have time to think about and to react to situation if it change not as we expected. The main reason why we thinking about repayment right now is because of over liquidity, and we don't need as much funding as we have right now, and it affects our profitability in a negative way. And in order not to be charged by ECB or in negative interest rates, so this is our reason why we think like right now. Another important factor is that due to the requirement to raise funding eligible to MREL, so probably we will, in the second half of this year, we will step in to the market with this possible raising of new funding that is meet these MREL requirements. That will, how to say, works opposite decreasing liquidity what we need. So this is two reasons why we think about such development right now.
Thank you very much for your answer. Another question is as follows. Why not pay extra dividends at the end of the year when ECB ban ends in September? Why keeping so high 20% capital ratio when your own risk appetite is 15.5%? Doesn't seem this capital is needed for growth or M&A. Thank you.
Okay, so answering the first part of the question is, yeah, that's natural logic, that the possibility to pay the dividends in September or later months. However, according to Lithuanian legislation, the dividend payment could be approved only in the annual general meeting of shareholders, and that could be done only in the springtime, naturally, when the profit distribution happens. So according to our country's legislation, current legislation, we can do that only in 2022, springtime. So definitely we will come back to that question at that time. And talking about this buffer above our risk appetite, yeah, but that's a coincidence of current period that naturally we were not able to repay dividends. And last year was rather weak on the growth due to the pandemic, as I presented during the presentation. However, we expect the rebounds of loan development, and some extra capital is needed for, those developments that we can utilize in a country, like mortgage growth, like SME growth rebounds. So we would use that, but of course we understand and see that there is a percentage points that are extra and potentially could be repaid in dividends. So all in all, let's see how how Šiaulių bankas could use the opportunity to sustainably further grow during this year. and we will come back to this question about dividend repayment at the beginning of 2022.
Thank you very much for your answer. We have received one more question, which is as follows. What steps could be taken from your side in order to slow down the decrease in net interest margin? Do you plan to further cut the rates offered for term deposits? Thank you.
Thank you for the question. Yes, so I mentioned during the main presentation, so that we have room for further decrease of term deposit interest rate, but even without doing so, our cost of funding will decrease because these steps that we made earlier are not immediately effective, because we need to wait until the deposit agreement expires and it repricing according to current interest rates. And as maturity of deposits varies up to 1 year, so this full effect will be visible within 1 year. So this one factor that these steps that we decrease our interest rates in the last few months will give positive effect in the coming 3 quarters. And also additionally, further cut of interest rate for deposit is possible. But of course, it's not, this reserve is not infinitive, but it exists. That will allow us to compensate the decrease in yield of loans, and those in this way to keep net interest margin more or less stable, which is currently is at very healthy, how to say, level, close to 3%.
Thank you very much for your answer. Could you please answer another question, which is as following. Was the corporate loan growth in Q1 related to a small number of larger projects or more broad-based? Thank you.
It's a combination, I would say. And the fact that in the first quarter of previous year and the first quarter of this year, we observed quite significant level of new agreements that we sign, but these loans that we sign with the customers are not, how to say, visible in our loan book immediately. It requires time when the customer already needs this funding. First, he secures funding, but according to the project, what he implements, the actual need for funding arises later. And we see results that appears on our loan book from these previously signed agreements. And it's a good combination. We have several quite big projects, but the majority comes from small tickets, either to corporate lending, and also the mortgages that we mentioned earlier, also significant influence on the increase of loan portfolio.
Thank you very much. Another investor is asking, could you please give some thoughts about the loan book growth for 2021 and 2022? Thank you.
We made our strategic business plan for 3 years, but we are fully aware that in today rapidly changing world, to make forecast more than for 1 year is a risky business. But we anticipate, and I believe that loan growth will be the very important factor for the long-term strategy of Šiaulių bankas. And therefore, we project loan growth rate above 10% all 3 consecutive years. Whether it will be in the low teen figure or it's above 15%, it depends on the, how to say, situation in general. But what we are targeting, I can say that it's double-digit figure for loan portfolio growth, despite that in absolute terms the portfolio is growing, and to achieve this percentage growth requires more loans to be signed rather than when we were a small bank and the loan portfolio was small as well.
Thank you for your answer. And we have received one more question, which is as follows. Do I understand correctly that you have opened 6 new branches in the past months? What is the target level of branches? Where these branches opened? Thank you.
Yes, thank you for the question. And it seems that some clarification is needed here. So it's not the opening, it's reopening of the branches. And in the presentation, we presented the branches that are operating in the particular quarters. So we shut down some outlets during the pandemic, and now we're reopening that. So currently we have opened almost all branches, so 57. We used to have 59, but we've seen that one is not efficient enough, so we are closing that branch. So 58 would be the total number of the branches, and currently we are operating in 57.
Thank you very much. I would like to take a chance to remind all attendees that you are very welcome to send in your questions on the question box of your screen. And we have one more question, which is as follows. Q1 low net impairments were partly backed by 0.8 million euros reversal of impairments on non-financial assets. Could you please explain? Thank you.
This 0.8 million euro reversal, it is related with the, how to say, realization of one of our NPEs, what I mentioned earlier. So in that case, the provision that we made earlier proved to be, how to say, it was too much provisions that we made, and we actually managed to realize this asset on the higher price that it was net value of this in our loan, in our books. That the short explanation without going deep to the concrete situation with this particular customer.
Thank you very much for your answer. As all the questions are answered, on behalf of Nasdaq Vilnius, thank you everyone. It was my pleasure being with you today. Recording of the presentation will be available in the Nasdaq Baltic YouTube channel. Thank you, dear presenters, for the presentation and a very interesting Q&A session. And have a nice evening, everyone. Goodbye.